Well, good weekend all. Ira Epstein with your weekend edition of your financial market wrap-up. And this wrap-up is for the evening of Friday, and this is the 26th of July, 2024. Well, just take a look behind me. The stock market's on fire. But it's more of a reaction back to the upside in the S&P and the NASDAQ. And it's a continuation, certainly in the Russell. You'll see that on the charts. And in the Dow, which is really caught on fire today. That's a sell-off from its high. This market was up over, nearly 800 points on the day. One heck of a rally. The gold market's been getting bids because people are saying, okay, when the Fed starts cutting, what's going to happen? Most likely, the dollar down, inflation finds a low point. That's why the Fed would be cutting rates. They're going to spur on inflation any way you want to do it. Once you start cutting the rates, the end result is you're trying to reignite parts of the economy, which ends up being somewhat inflationary. The grain market's down big. So food is coming down this month in a big way. Why are the grains down when we got hot weather coming in over the next 7 to 10 days? And the reason is you're also getting rain with it. So it's like a greenhouse. 90 degrees isn't the problem if you get enough moisture with it. It's good for the crops in many cases, and that's what's hitting these markets. So if you want to be a weatherman at this time of the year, this is the place for you. I don't want to be a weatherman. Very hard markets. Bonds and notes, well, why are they up and why is the stock market? I have been adamant since, you'll remember March and April, me talking to you. And I kept saying, I agree with Jeremy Siegel of Wharton, that you have to have three of something. It's very common to get 3 low periods, 3 high periods, 3 of something so you could say, it's not a fluke, you got an average happening, and we're getting that. I think June went in the bag, and I said that, is a weak month for the Fed, what they wanted to see. I think July will go in the bag as a weak month that they want to see. CPI, PPI, JOLTS report. I don't know what the jobs report looks like. And mentioning that, we'll come back to this comment in a minute. You do have the Dallas Fed on Monday coming out with their manufacturing outlook at 9:30. But you have the JOLTS report Tuesday. The FOMC starts its meeting on Tuesday, ends it on Wednesday with the statement and a press conference. We're going to get ADP, Challenger, Gray, and on Friday, we get the all-important jobs report. So what I'm saying on jobs is we see the frame. We see unemployment moving higher. We're seeing that you got the wobbling now in the jobless claims, up big one time, then a correction. A Hurricane Beryl threw a lot of things off in that, so you want to be certain as to where you're at. But if people are looking for jobs, I'm on the local media outlets for Chicago. I like to read about where I live and things like that. I'm looking for a job. Can you help me? This, that. They're there. I'm not seeing help wanted signs in the windows. Are you in your area? Just drive around and see if you really see that. I remember all the fast food chains would have help wanted. You drive somewhere, you'd see it. Not anymore. So I think it's a combination higher wages. I think that it's a combination. You got to use better technology. You can't afford to keep hiring people at what it is. California is seeing layoffs galore in the food, and you're seeing restaurants close there because at $20 an hour minimum, it's very hard to hire all these people and make a profit, especially with $5 burgers. You understand the point with these value meals and people so cost conscious. So you got to find ways to be more productive. Starbucks is trying it with their drinks, and that's why their stock hasn't been the stellar stock it used to be. It's very hard to go out and justify, hey, I'm going to get a couple of coffees today, and before you know it, you're out $14, $15 if you live in a big city with the tip of what you're buying. It's just the way that it is. If you're a tipper, I assume you are. So that's part of what you're dealing with. But I do believe that we're going to see 3 months of weakness. I think the Fed will move. I don't think they'll move in July as so many would like them to. Number one, it might send a message that they've missed something and the economy is weaker than you think. Number two, the Fed likes to lay the groundwork for you. So if they're going to cut rates, you'll probably hear the Fed very, very much leaning to that, but not saying it on Wednesday. Now, as we get into August, if the data is still weak, I think that you'll hear them even lean harder, where it's hard. He won't ever say, we're going to cut, but he will go, well, we're certainly studying it very hard and considering doing it right here, and we're weighing what the options, things of that nature. No, it's not time. The members need to be sure of what they're seeing. That's where I think you're at. When we look at the S&P, so you're down 0.5 point for the week. Does this look to you like the market on a closing basis has come apart? Yet when you read the press, that is the impression you get, right? The market has come down dramatically. On a closing basis, the peak was last week. Got that? And that was at 55.2150. Now you've backed off not very much, 22 points, and you're down 0.5% from the peak. If you call that a big correction on a closing basis, okay. When you go to the weekly chart, you see a little bit different. So as you come in on closes on the weekly chart, you got to go back. So here's that highest close at 56.64. Then we dropped nearly 2%. The week after, we dropped 1% more. This on a closing basis. And that's where you're at right now. It's not like you've crashed in the markets. When you take a look at a bar chart of the weekly, you can see the recent peak and how the market is starting to back off. You've stepped out of the uptrend for the first time. If I come back, let me come back just right here. You had the pattern of higher lows and higher highs. Now, if you take this out, you break that pattern, and it's exactly what occurred. So now the pattern is no longer higher highs, higher lows. It's a higher high and a lower low in the market. Where's the support? Potentially the 53.51 level. Is that 10% down from 57.50? It is not. You'd have to get even lower than that into this area to be there. It could happen, but you haven't reached that 10% area. So I'm looking to see, can the market fall a bit further into that 53.50 area to what happens. And on the close of business today, first time, you lost the bullish embedded reading. So since May, when we embedded, this is the first time, and now the work in terms of momentum is saying, don't want to be long unless it re-embeds this coming week. After that, the odds favor that price and wherever that red line, the 18-week averages, they'll come together. When we look at the market in terms of the slow stochastic, it's overbought. So, a couple of ways you look at that. This is the S&P 500. This is the Dow. Overbought, got up to the upper Bollinger Band, running into the resistance. NASDAQ, bigger correction. You got up to the, 2093, and all of a sudden you've fallen back here pretty good. It's certainly a 5% correction, but we can prove that. Here's the market down 3.95% the week before. And here's this week down 2.73, so 5-6%. You're right in that area. And this is your first support zone. On a weekly basis, to take the market out of the uptrend, fully out of the uptrend, you have to get back under right here, the 18,241. It could happen, but that's what it has to do. It really doesn't have to go any lower than where it's at right now. It can afford to fight a battle right here. When we come to the Russell, a different world. The laggard market through all this had been the Russell, so it's catching up. And you're staying over the Bollinger Band now 3 weeks in a row. You're overbought, and some will call this a breakout. Now, if we go to last week's close, not this week, the week before, the high for the week was 23.04. You didn't close at the high part of the week, unfortunately. So for me, it's not a true breakout. Yes, it's coming out of the sideways action, but it's not the market in the sense that I have a rule for what a breakout is. No. Do I think this is a bottom in the market for quite a while? Absolutely. I think it'll be hard to get all through this. In other words, I think it's going to be hard to go back through the 1900 level. You need some shock to the economy that I don't see. When we look at the 5-year notes, as much as I think interest rates are going to be cut and so on, you're at a big resistance point. You're at the 100-day average in the upper Bollinger Band. You challenged it last week. You haven't gone anywhere this week. In the 10-year, it's the same darn thing. You haven't gone anywhere. So it's overbought. If it embeds and gets over those, then I'll get interested in the market. Right here, I see a resistance point. In the dollar index, you've fallen to the lower Bollinger Band. What's my rule? First time you hit a number, if it's not embedded, the pro's coming out. You're not embedded, you hit the bear side. I think the bears are covering shorts. In the euro, not embedded, you went to the upper Bollinger Band, you backed away. Came down to it here, never did embed, you bounced away. So the extremes are being hit. It is summertime. Keep in the back of your mind what Europe does. Europeans, the big traders, the A-League traders, they're out for the month. They go away. You got the Olympics going on. The town is full of people. Those that can afford it, which are often big, heavy-duty traders that we think in finance, they're taking off for the summer. Your B-League comes in, and they'll trade the markets accordingly. In the Canadian dollar, higher high, lower low. You keep failing at the 18-week average. You don't get a clean trend in the market. You're bouncing around, difficult market to trade. And in the end, you're probably setting yourself up for a market that has fully anticipated a change in the bond buying policy, dramatic one I'm looking for over time. So we'll see if they disappoint or they meet it. It's a flip of the coin. Are they going to raise interest rates right now? They might just set you up, they're going to do it, but not do it. I don't know which. I know the market's out of the downtrend. You lost the bearish readings all the way back here. And again, if you haven't taken my enhanced Bollinger Band course, you should. Right there, you lost it. That meant I'm looking for at least the 18-week average unless it re-embeds right away, which it didn't do. And kaboom, I got what I wanted. If it keeps going, the upper Bollinger Band will be a stopping spot. You're not embedded. I think the pros will dump against that number. Bitcoin got down to its Bollinger Band, never embedded. Need I repeat? That's where I think the pros covered shorts. Then we look at the differential now between Brent and WTI. It's no longer at an extreme. It's coming back up. Resistance is 421. There is no trend in this market. There's a bias to the downside, but you have a higher high, lower low pattern in Brent. You have a downtrend in WTI. This is why yesterday's move surprised me. Lower highs, lower lows. And why it's bouncing is this the first challenge of both, the 100-day and the 200. If you give ground this week under this low, look wherever the Bollinger Band is to be the next zone. Gasoline doing the same. It's fighting between the 200-day average and the 100. No trend, though. Higher high, lower low. And when we take a look at it all together, a really fun market in that way. But it is summertime. You get choppy markets. If you're looking for clean trades, you're probably not getting them. The guys that are winning today, and understand, they're not trend traders. They're picking a spot on a chart and they're going, this looks cheap to me, I want to be in it. And that's how they're working. I can prove that on the charts. That doesn't mean that it doesn't work. There are times when it's working, and that's what you're at right now. But a true trend trader, they're probably saying, it's a good time to be going a little bit here. We're in the middle of summer. What am I looking to do? We're at a conversion from the Fed from a tight money policy going into a loosening of that policy, and we're seeing it in the data. Now, I talk every morning. I start at 6 on the futures, and at 9, I talk on the Spider ETF, and I make a recording. And I give you trading ideas in my research. So I cover in both 40 charts. So the charts will look very much like this. They'll be on a black background. There's more lines. You'll say they're confusing. They aren't. They're moving averages, swing lines, which you're seeing here, Bollinger Bands, which you're seeing here, the slow stochastics, and one addition. called a window envelope. And it's a very popular study. And it gives you an idea from the way I do it, from where previous support and resistance zones are, is to where stopping spots on an existing trend up or down may go to. Just another way of measuring what goes on. So you put that together, and then I mix it with daily and weekly charts. I start you off in the morning. What are the reports? What's going on in Asia or Europe that we should know about? Are there earnings coming out in the ETFs? We talk a little bit about that, where they're at, and then we go into all the chart action. My goal is to come up with both long-term and short-term trades, all right? Short-term, I'm not a day trader. Short term, like today, I did XLI 3 days ago buying it, and today I said to come out of that. Luckily, a winner in that. So happy guy, yeah, made what, 7%, 6%. I'm happy. Those are the kind of trades I like to live with. 5%'s good, whatever it can give you. All right, iEpstein.com research. Come up here. And by the way, on my Spider ETFs, because I don't write a newsletter for that, before I record, I send you the morning recommendations that I'm putting out. You get them, and then you can watch the recording with it or act on them before I publish the recording. That's a new change that we made there. And in my research for futures, if you take my full research, you get my written ideas, where they're at. The night before, I'm telling you where I'm trying to get you to buy and sell, and then I update that in the morning in the video. So you're always up to date with what we're doing. And I get 2 written updates a day minimum in the futures, Monday through Thursday, and then on Friday morning an update, Sunday evening an update. So there's a lot there. You can also click up here. You'll see an icon. Go there, give it a try. It's basically the price of coffee. Yeah, get yourself a nice latte, whatever. That's about where you're at to give this a try. I'm Ira Epstein. You have yourself a great weekend. I'll catch up with everybody Monday.